Animalistic. You can see
Fuck
everything?
yeah. Yes.
All right. So welcome to the video, everyone. Today I have Joshua Salvetti from the High Performance Trader joining me today, and we are going to walk through some of our strategies, talk through some of the trades we've made and the mentality that we are building and the strategy that we're building over the last couple months, and we're going to talk you through some of the trades that we took and what we're learning from this. So how are you doing today, Josh?
No, listen, Darren, I'm super happy to be here. I am super excited, right, to basically break down what it is we've been working on, right, how well it's been working, and kind of how it evolved, right, over time, right, because price and volume analysis is it's such a big subject, right? Like most people, they think it's just supply and demand, right? But what we've done is really dive deep in identifying areas of value, right? So I'm super excited to run through that, right? How we identify our edge, right? And how that's, it's different for everybody, right? So I'm doing very good. I'm super pumped. I can't wait to break into it. So yeah, let's get it.
Awesome. Yeah, we've had an amazing last couple months on the High Performance Trader Discord and the community. I highly recommend you get involved. Follow all the links that Josh posts because every single day we go over these zones and we're building an amazing community. So some of the things I want to go over in this video are knowing market conditions and looking at market conditions through an objectivity state of mind, and knowing that just because we think the market should do something does not mean at all that that's what it's going to do, and how that's actually a crippling mindset to have, especially in the last couple weeks. As you can see, I mean, serious uptrend, even though all of the crazy news coming out about banks and everybody freaking out about the market crashing, and it's still this strong. So this goes to show that that you can't just predict what the market's doing. You got to react to what it's giving you, and that's going to give you the most success. The next thing I want to talk about is how we came up with our strategy of looking at a chart pattern in a zone. And that is our strategy. That is our edge. And we gain probabilities, statistics on each of these setups, how we use that. The importance of not rushing setups and approaching each day with discipline. I also want to talk about different strategies. Sometimes we like to scalp, sometimes we like to swing trade or day trade, the different things that we use there. And then finally, I want to talk about how you can maximize your winners by holding on to winning trades, and how you need to be in a confident state of mind to hold on to those winners. So I think we can get right into it. So first thing, market conditions I want to talk about. Now, if you look right here, we have an uptrending market. And basically, what that means is that demand zones have been respected more than supply zones. Supply zones have been getting broken with immense strength the last week. I mean, you can see here, we had a strong supply zone at this head and shoulders and all the way on the left at the beginning of the month, and we blew through it with immense strength. And basically, what this teaches me is, like I said before, you cannot just assume that since we're in a supply zone, you're going to short the market. And if you do short the market, you need to be ready to stop out insanely quickly. You need to have accurate stops on all of your trades. What do you think about this, Josh?
Yeah, I think you nailed it right on the head, right? So like, for a while, right, we have been in a downward trend, right? So, for about the last, what is it, like 13 months, 14 months, right? We have been in a downward trend, right? We call a bear market. And the way we identify that is we continuously make lower lows and lower highs, right? So when sellers are in control, supply zones are, you want to trade with trend, right? And that goes back to the topic of trading with market conditions. And most of all, how to identify them, right? So what we're starting to see, right, and we started to see this, right, like, right, let me see, right in February, buyers started showing up. We got this consolidation, we got the breakouts, right, and it's really important, right, like I like what you said, where even with all of this news going on, we got things, we got this super volatile market, right, and what that's doing is creating these opportunities, right, and it's so important to be able to identify these opportunities. And just like you said, it's also just as important, right? Where when you identify your edge, and we're really going to flesh out what that edge is in a little bit, but when you start to identify your edge, right, it's super important that you take the trade. And that does not mean it's always going to go our way, right? So even though we are making the transition from sellers to buyers, right, even though we still see some supply zones, right, there's still perfect trades that are in front of us, right, in supply, right, and then we're going to get stomped out, and that's completely fine, right? That's okay, right? It's just that overall transition from bearish to bullish is extremely important to be able to identify, right? Because as these opportunities continuously are in front of us and we're able to identify them, right, able to take them, able to build more conviction in our edge, it's like this massive snowballing effect momentum, right? And it's super important, and it's really exciting as a trader to live in these times, right? Because
Absolutely.
we've talked, you know what I mean? We talk about getting in bull markets, but if a trader can become successful in this sort of market, I truly believe there's not a market that they can't. You know what I mean?
Yep. Yeah, I think one of the things that this current market has offered us is the ability to constantly adapt to new market conditions. It might be that supply zones are not being respected. It might be super volatile price action intraday, where price is just fluctuating back and forth. But all of these things, while yeah, they might seem frustrating, they give us an opportunity to sharpen our edge and sharpen our skill set, and it forces us to make
Yes.
rules. And we don't want to
Yes.
learn in a market that's just continually uptrending, because that's not going to help us in the
Yeah.
long run, And especially me, I'm a very
Yes.
new trader, and I welcome these new market conditions just because I know it's solidifying my edge, and it's giving me the opportunity to create rules for myself. And if I don't make the most of that and use that to my advantage, then when we eventually do end up in a bull market, I'm going to be worse off if I hadn't actually applied myself and used that to create rules. But I mean, just look at this right here. So back in, I guess this was back in the beginning of the year, or December, January. On the left, we have this demand where we were basically in this tight zone. And I remember looking at this thinking this is going to be important later on. But when we re-enter this zone, the amount of volume that's kicked up here is absolutely crazy. Just
Yeah.
all this buying
That is,
volume. Yep. That is our
yeah,
edge.
that is literally the definition, right, of price and volume analysis, right? It's
Yep.
literally, you got this demand zone, right, over here at 12.19, right? This consolidation, right? That is nothing but a battle, right? And what I love about price and volume analysis, right, is the fact that it does not matter the time frame, right? It doesn't matter if it's a weekly, monthly, 1 minute, daily, 4 hour, right? We get this consolidation. And then as price comes back into this area of value, right? And we define that as an area where we're looking, right, for an opportunity. We're looking for smart money to step back in. We're looking for volume, right? That's exactly what happens, right? That validates our edge, and that is exactly what we look for consistently. Yeah,
Yep.
I love perfect example.
Honestly, this is the first time I've really pulled it up on the daily like this. And I mean, it honestly gives me goosebumps every time I see our edge just show up like on any time frame. And I know we talk about it the
Yeah,
whole time, but it is super crucial to look how price acts when it enters these zones. You know,
yes,
if we see sharp buy ups and high volumes, that is the how of how price is reacting to these zones. Like we have a zone, which is our location, and then we wait to see how price reacts, and then we react when we see this action. So I don't know, it's just
yeah,
amazing to see it play out like this. But
absolutely. And that's where the importance of the candlestick analysis comes in, right? Because you can literally see sellers trying to show up there, right? You can literally see, and it's so cool to see, right? How right there, once we came into demand right on 313, right? Look at the wick on top. That is sellers trying so hard to defend this area of value, right? And this
yep,
is what I absolutely love about candlestick analysis, right? It's giving you everything you need. Right? Price comes down into 385, right? A little bit below. Sellers try so hard, volume through the roof. Buyers step up, defend it, right? And you get this clear gap up the next day, right? Just validating the whole effect, validating the double bottom, right? Validating the demand rejection, right? The dimension, the rejection out of demand. And ever since then, we've gotten tons of
Yep. Yeah, massive strength out of this area. And as you can see, I mean, we almost gapped up for about 4 days in a row here, 3 days in a row. That is just insane strength. And we're
yeah,
really
absolutely.
seeing it all across the equities. Apple, Tesla, just
Yep.
about everything is ripping. And the
So how
fact,
much sense? So let me ask you something real quick, Darren. So how much sense, right? Now that we've identified this strong demand rejection on a daily time frame, right? Like a larger time frame, we could clearly see buyers stepping up. And so what we're doing here is identifying market conditions. So how much sense would it be here, to trade with demand, right? When it,
I mean, the way that I look at it is until proven wrong, you need to trade with the trend. And it's not going to do us any good to predict that, oh, now that we're at the top of this little channel, we're going to sell off. I just think that you have to wait and react to what happens. If you're just only thinking sell, sell, sell after these
Yep.
couple days of bullish action, that's the wrong way to go about it because you're predicting what's going to happen as opposed to
Yes.
reacting to what's going to happen. And I don't.
So what's the effect that'll have on your mind, right? So this is something we talk about all the time, right, with market psychology, right? So as just like you said, right, once we start to predict, right, the how that affects our thinking process is so critical. You know what I mean? Like once we start to predict, right? Okay, so we're reaching a supply. Right now, we're gonna go with sellers. You know what I mean? And then how hard is it to start to actually see the correct market?
Mm-hmm. Oh, it's definitely a crippling mindset to be predicting because let's say you've gone short and and now you need the market to move in your direction. And if you need the market to move in your direction and it's not doing it, it's just going to put you in completely the wrong state of mind. And I'm sure all traders know what I'm talking about here. But
Absolutely.
if your trade is moving against you, you want it to go short and it's ripping up, you will see the smallest red candle and you will get super excited thinking that this reversal is coming. And that's just not the way to trade. And you cannot be holding on to these trades hoping that it's going to turn around, you know.
Exactly.
Um, but market conditions super key. I think every single day when you enter the market, you need to look at the daily every single day. You can't just think that since you looked at market conditions yesterday that you're good, you know. I think
Right.
every single day before the market opens, pull up that daily chart, look at the conditions and look at those candlesticks and really let them tell you the story about what the market is telling you.
Yeah, it's super. I love that you brought that up, because and we dive deep into this on the course and the Discord. Everybody knows, right? That first step of our systematic daily process, right, to getting in and out of the market is observe market conditions, right? And the way we do that and that we break it down in a systematic way is you start on the daily time frame, right? So exactly what we just did when we had the daily time frame up, we identified that demand rejection right over there. When was that? That was back on like January 1st, right? We really broke out of demand. So
Yep.
now going forward, we've identified the strength. And then what we'll do is start to break down into, okay, on the daily time frame, we got a supply zone um, up at, what is that? That's at 418. So pretty much until then, that's how we identify our market conditions. And then we'll slowly break down, right, in lower time frame and then just work our way towards a more uh, smaller time frame,
Yep.
a more specific chart, you know what I mean? And identify those time frames, right?
Yep.
And then, obviously next are the zones.
Yeah, that segues perfectly into the next point, which is chart pattern in a zone, which is where our edge like comes into its own. But once you move closer from just looking at these daily candles, when you move into the hourly, you're going to start seeing these chart patterns show up. Head and shoulders right here, break and retest. We saw the break and retest so much
Yeah.
in the last couple of weeks, and especially with all the bulls coming in, the amount of times that worked. But But this chart pattern in the zone is super super crucial, and I think as well what I learned on Monday this week is that patience is key, and it doesn't matter if your zone, if price touches your zone at 9:30 in the morning, you got to take it. It might only touch your zone in the afternoon. You know, it might only touch 2 or 3 in the afternoon when that afternoon volume comes in. But you need to be patient and wait for your setup. And one thing that I have learned is that if the market is not showing you the setups that you want or bouncing off of your zones, you don't even need to trade that day. You know, I think it's super important to have those rules for yourself and only take those setups that actually reach your zone of interest before you make a play. Josh, what can you say about that chart pattern in the zone strategy for our edge?
So the chart pattern in the zone, right? It tells us so much, right? So the first thing it tells us, right? So a chart pattern is nothing but selective human behavior, right? So what we're trying to do here every single day is identify opportunities that make us money, right? And we do this through chart patterns, right? And I remember when I first became a trader, right? I never dived deep into the psychology aspect of price action. And basically, what it is, right, is a market auction, right? So as we watch these charts and these chart patterns and price action, literally what we are watching is a supply and demand auction. So as we identify these areas of value, right, these supply zones, right, you hear us say chart pattern in a zone, what we're talking about is within a supply demand zone or any area of value. And basically what we're doing here is waiting for price to come into an area of value and give us that chart pattern, right? And what that's giving us is our edge, right? That's giving us our opportunity to put on a high quality setup, right? It's extremely important to do this on a daily basis. I'll never forget when I was a beginner trader, all what price would come into a supply or demand zone, and I would automatically think, all right, price is in demand, let's go long. And it's very it's a skill that takes a lot of time to learn, because us as humans, right, we just want to see these patterns and take the easiest trade. You know what I mean? And at times trading is very effortless, right? But the super important aspect here is to understand that we are waiting for large money to step into the equation, right? And we do this via volume and chart pattern, because we as retail traders, we cannot move the market, right? So we cannot make the market go up, not make it down. And since we need price to move for us to be profitable, that in a nutshell means we need large money to step into the scene. You can see here, Darren has a perfect example up here on the S&P 500, right? We got this demand zone, right? It's a blue line. Well, actually, we got the supply zone up here. We'll just start here. So right in pre-market, we get a sell-off right at 298.75. So as price, that is our area of value, right? A pre-market high, supply zone because we've got a sell-off there, right? That means some sort of large money or market influencer chose to take the market short and move price down. So what our edge is when price re-enters this, right, in a graphical presentation, right? So when price rips up into 398.75 and we start to get a rejection or any sellers that are present, that is basically telling us this chart pattern, right, this double top in the supply zone, right? This is telling us that smart money has stepped into the equation. This is when we piggyback on smart money, we go short, targeting, right? It's super important to learn how to identify this, and not just how to see it, how to exactly understand what is going on. Because what that will do is help you be able to spot it in live time, right? You'll know exactly what to look for, right? And this is 100% our edge. This is what we do to make money consistently. It happens every single day, maybe not the same way, but it does happen, right? And this is how we capture the market imbalance, right? It's absolutely perfect example here.
Yeah, I love this day. This was Monday this last week. Could not have been perfect bounce off these different zones. And one thing that I recognized right out of the gate is we were in a supply zone, but this initial buy up at the beginning of the day showed me that buyers were ready to step in. They just wanted to play off of a demand zone. And that's another key
Yeah.
thing, that this is an uptrend. It has been an uptrend for the last 2-3 weeks. If you see this kind of action at the beginning of the day, that should give you clues that buyers are ready to step up. However, since this is a supply zone, we're going to see a little rejection, and you want to look for the next zone / area of value for your entry if you're going long. And that happened to be this end of day. That's what I got, this blue line, end of day, previous day close. Doesn't matter what you call it, but this is where buyers were waiting to step in. And another key thing which plays out on this day is this cup and handle. And yes, there's a lot of volatile action, prices chopping back and forth. However, if you were just patient and you waited for this to play out, you would have caught this perfect cup and handle right here at the end of the day. And that takes patience, waiting all day for to capture this small move. This small move could have made you easily 200% trading options. So I just think it really proves that being patient and waiting for your setup to play out is just super key.
Yeah, it's so, and it's really important here, right, Darren? At right around 12, we get these two basing candles, right? Or that first initial basing candle there,
Yep.
rejecting off end of, right? Well, yeah, you get that retest, buyers show up right there at 11, right? And then price comes back down, retest it, and then check that volume out right there. You know, that volume really kicks up right there at like, I think it's 12:45. And then right there, big volume coming in. That right there is the main indicator that large money is stepping into the equation. Right there is telling you they are interested in this area. They are interested in this level. Super important to keep your eye on the volume aspect, right? Because that is what truly validates. Because if I mean, you can plot these areas of value to your blue in the face, but if you cannot identify the volume or the large or the market maker stepping into the position, I'm going to validate it, right? And I see so many traders that they see their area of value, and they always go, Josh, how do you know when to in the trade? And the truth of the matter is, you really don't. You don't have a perfect smoking gun. You don't have a green light on, hey, this is the perfect trade. You will never see the exact same variables. All you will get is a valid confirmation that somebody is interested in this level, right? And you see that with volume. That's this right here is a perfect indication to go long, right? And it's exactly what happened perfectly. And absolute perfect.
Yep.
And I love this day because you can literally see the battle between sellers, right? And you got to think of it also like this: when sellers are in control, buyers are patient. When buyers are in control, sellers are patient. So you're pretty much looking for some sort of violent move with volume to tell you, hey, market's changing. I'm going to show you this through a chart pattern. I'm going to show you this through the volume.
Yep. And the other thing I like about this day is that there was not just one opportunity for entry. Yes, you could have got in right here at end of day, but let's say you missed this initial move. That right there is telling you that buyers are stepping up, and sellers are strong because of this action over here. But it gives you multiple occasions. Look at this retest right here. That wick right there at a retest to this level, crucial. And again at this cup and handle. So many different opportunities to enter this trade. And one of the things that also tells me is to just trust your process and enter on one of these pullbacks. You have multiple opportunities to stop out. If you got long here, you could have stopped out below the low. If you got stopped out here, but the fact that price continually made higher lows was a super bullish sign. And this is a great example right here. But this is what we're talking about. We have demand zones, supply zones, are all areas of value. End of day is also a key area of value. Pre-market high, pre-market low are also all key areas of value, and you need to watch how price reacts to these different levels. It's going to give you massive clues to what's going to happen throughout the day. I mean, here's another example right here. Pre-market high, failed to hold pre-market high, sold off sharp. I think this was Thursday. And again, retested this area, massive selling volume coming in here. And these zones act as magnets. So once price reacts and retests this supply zone, you know this demand zone is going to act as a magnet and pull price all the way down to find more buyers in this auction. It's just fascinating to watch it happen.
Yeah, and I remember when I first started trading, right? I would have it in my mind where I was looking for a long entry, right? And I may have back as a beginner trader would have maybe went long there at 10 o'clock, right? When I seen some volume, right? But now as a more experienced trader in price and volume analysis, I know once I've identified a seller there at 404.25, I can't go long until price comes down 401.75, or you know what I mean, when price gets above pre-market high with a break and retest.
Yep.
And basically what I'm trying to say here is the importance of reacting to price in your zones, right? So we go through every single day on the Discord, right, a bullish and bearish scenario. In my overall pre-market plan, right, bullish and bearish scenario, and my overall goal with that is to really stress the importance of only reacting to the market, right? Once you get into, I think market's going up today, I'm going long, you stop predefining risk. You stop, looking for key clues, right? Your brain literally does not process information properly when you are thinking biased, right? When you are assuming, right? Once you assume, hey, Tesla is ripping, I'm going long, right? That's when you start to get alive in the market, right? And we dive really deep into market psychology, and this is literally what it is in a nutshell, is to be able to protect yourself from bias, right? Once you start to assume things, you get hurt.
Yep.
Right? So it's really important to have a trade plan before the day begins. That's exactly what we do, right? We break down a bullish scenario and a bearish scenario. And in those two scenarios, there is maybe one or two areas I'm looking to make a move. That's it. I will not make a move unless price comes into there. Just like you said before, right? It's completely fine to not make a trade if you don't identify your edge, right? And it's really important to understand what your edge is before the day begins.
Yep. The two strategies, bullish and bearish strategy at the beginning of the day, have been so valuable for me. It makes me super unbiased at the beginning of the day, and it also helps me stop out really easily when the first plan isn't going my way. Because in the back of your mind, okay, plan A isn't working out. Now I'm just going to go with plan B. This is fine. This is my strategy. I'm still operating on the plan that I had pre-market, and it allows you to be super objective. And at least it's helped me stop out way quicker when my trade's just not going my way. I will not tolerate these trades moving against me and just holding on and hoping.
No. And it's so I love that you brought that up, because for the longest time, right, I'll never forget this number, right? So we over here, me, Darren, everyone on the team, we dive deep into logging our trades, right? Our material. We've come up with key metrics. Trading metrics is a statistical way to measure or success, right? Or your trades, are they winners, they losers, right? So what I'm getting at here is there was one time where I had an 84% win ratio. 8.5 out of 10 trades I took were successful, and I was still not profitable as a trader because I cannot get rid of my losers. It is so important to understand that you can have 9 winners, but if you cannot control that loser, you do not have a shot. You don't have a prayer. And it really comes down to needing to be right, right? We have this thing where we really don't like facing adversity, right? We don't like admitting we're wrong, especially on the market. It's very emotional atmosphere, right? It's very emotional scene, right? And if you cannot control your losers, you don't have a prayer, right? So what you're saying here is we do not tolerate trades not going in our favor, right? So you need to be able to pull the trigger on that. You need to be able to identify that, right? One of my main problems back in the day is not that I wanted to lose money. It's that I subconsciously didn't want to make the hard decision.
Yep.
So I love the fact we do not have time. We don't tolerate trades not moving in our way. We will re-enter the trade, right? Because we trade with proper position size, right? These are all things that traders really need to understand. Because at the end of the day, you can have a 90% win ratio can still fail in this market if you cannot cut those losers.
Yep. And I think that definitely comes with time. But one of the main things you can do is accept smaller profits. At least for me, this is how it went for me. But when I was able to accept smaller profits and stop shooting for 70 to 100% winners, I built up this consistent win after consistent win, base hits, even though they weren't crazy. And what that allowed me to do is hold on to my winners longer. If you're in a losing streak, and you keep on losing, you're gonna see a trade go green, go 30%, and you're just gonna scrape profits immediately because I mean, when's the next time you're gonna get a green trade, you know? But when you're in a winning trade, when you're in a winning streak, you know that the next trade you can make, it can be a winner. You know, it can be a winner or it can be a loser, and you're not attached to the money and attached to the fact that it's a winning trade. You just cut that trade because you know that the next one you know how to make winning trades. So I think it's super important to recognize the psychology behind when you cut your losses and when you cut your winners based on if you're in a losing trend or if you're in a winning trend. And it's super key to actually understand that.
Yeah, to build, and what you're talking about here is building conviction, right? Conviction,
Yep.
confidence, and control, right? We talk about this all the time, right? And this comes with logging your material and actually understanding where you're at as a trader, right? So the more base hits that you can hit, the more conviction you're going to build, the more confidence you're going to build as a trader, right? And what that does is actually alter your belief system, right? Because your belief system is everything that is between you and your success, not just as a trader. If your belief system is not proper, you will not be able to cut these losers. You will not be able to identify winning trades. You will not be able to identify your edge, right? Your belief system is insanely important. What I mean by beliefs, it's what you actually believe you can achieve in the market, right? So we talk so much as actionists, right? Actually building positive affirmations and consistently working on ourselves as men, as traders, as better people to become a more disciplined trader, right? And all that is building a disciplined lifestyle leads to disciplined trading. Changing your belief system, right, leads to successful trades, right? Big gains, building that conviction, right? It's so important, right? Because I used to struggle with self-sabotaging behaviors. I would consistently, subconsciously make losing trades, right? Even though I know how to identify my edge, and it all tied back to my belief system, right? And how what I believed I could achieve in the market. So it's so important to understand exactly what you're saying. What you're saying is not every win has to be 100%, 120%, right? We consistently make these trading errors when our beliefs are not in the zone of what we're trying to achieve, right? So we build those strong beliefs through these base hits, right?
Yep.
Through logging our material, right? Through actually identifying our edge, right?
Yep.
So important.
And that disciplined lifestyle carries over to your trading so much because every single action you take in your life is programming your subconscious mind to tell you that you are a consistent person. If you're an inconsistent person, sporadic, irrational in real life, and you expect to show up to the market and create rules for yourself and operate by your rules, that's not going to happen because your subconscious mind knows that you're not a strict person. You're not a disciplined person. And when you do that in your life, in the way that you interact with people, in your daily habits, at your job, and the way that you tidy your home up and everything, it just all carries over to your actions in the market. And whether you realize it or not, all your actions are programming your subconscious mind to tell you that you are that consistent trader or that you're a sporadic person, and that you can't be satisfied with 60% winners. You know, I think it's all carries over to trading.
Absolutely. Well said.
Yep. So another thing I wanted to talk to you about is waiting for valid confirmation across charts. I don't think I've ever asked you this before, but I'm just curious how you go about like maybe looking at other equities like Tesla, Apple. Do you use that to get into charts, or do you just look at SPY and QQQ? What do you think about that? Sorry, kind of changing gears up
So
really quick here, but
no, that's completely fine. So it is extremely important to look at all leading equities, right? And what I mean by leading equities are the big boys, right? Tesla, Apple, Microsoft, right? Nvidia, AMD, and the way we validate those is market capital and volume, right? So as we continue, and I don't care if you trade futures, I don't even care if you trade forex, right? I truly believe that the main ETFs, right, the futures contract, right, SPY, QQQ, they literally are made up of these companies, right? So on Friday, you can see, right, we'll just run through Friday real quick.
let's do
There
it.
was multiple if you pull up SPY, you'll see SPY, right? Really ripped. There was strong buyers. There was a lot of movement to the upside. VWAP being defended, supply zones being crushed, right? And you know, it makes it, looking back, it's like, wow, where did this strength come from? Now pull up Tesla, right? So Tesla has had amazing volume, right? It has been breaking all like supply. It has been super strength, right? So going back, like, so looking at this chart, how much sense would it make to you, understanding that Tesla is one of the companies traded on the S&P 500? How much sense does it make to go short when Tesla is parabolically shooting into space? You know what I
It
mean?
doesn't make
Tesla
sense.
is literally ripping, what was that? $16. $16, bro. That's almost what? It's like, 6%, 7%. Yeah, 6.4% gain, right? So that goes into identifying market conditions, right? So every single day on the Discord, we go, hey, in a bullish scenario, I'm looking for price to break X, and if and when large market leading equities are also showing strength, I'll be looking to move to the upside, right? So that plays a very vital role right there, and you can see Tesla is absolutely ripping. Buyers are definitely interested in getting involved, and
Yep.
it's showing up in SPY as well.
Yep. I always look at these other charts. Some days I'll put more weight on them than others, but a lot of times I feel like that's part of my edge is when I see everything lining up on SPY and QQQ. Probably one of the last things I'll do is just double check with Tesla or Apple to see if that exact move is being validated across the charts. And then I've got a chart pattern in a zone. I've got volume, price rejecting, and I've got Tesla doing exactly the same thing, or market leading equities doing the exact same thing. And that is my edge. That's when I pull my trigger, and I know that that is the highest probability of everything lining up that my trade will go in my direction. And even then, there's still a 20, maybe 20, 30% chance that the trade can move against me. And that's when I've got my stop.
Yeah, it's very important that you identify that, right? Because even when you can have every factor lined up, but the market does not need to respect what you are expecting, right?
Yep.
I mean, and it's very important to understand this. This is a long-term probable outcome game, right? My consistency never was there until I finally stopped trading on a trade-by-trade basis. Right, so we dive really deep and extensively into Mark Douglas, right? And one of the things he covers here is that we don't trade by trade. We trade over a series of trades, right? And the importance, what that does is really alter our perception and our expectations of what we're trying to get out of the market. If every trade you take needs to be correct for you to feel good or for you to make money, or then you're going to consistently fail because you're not going to be able to perceive the information the market's giving you. If you go into a trade and you have every variable that you can control lined up, what's telling you to even set a stop, right? Because you're in your brain going, I have every variable here. This is going to be a slam dunk trade. Why do I make stop?
Exactly.
And then what tends to happen in that situation is you don't make, because if you were going to put in a stop loss, let's accept the fact that this trade might not be correct. And if this trade isn't correct, why are you taking it?
Yep.
Right. So that goes back to those contradicting beliefs. So it's really important to even under these circumstances, right? But Tesla's ripping, Apple's ripping, right? SPY is ripping. this still has a chance that it could go the other way. And it's very important to be able to identify that.
Yeah, I love that. I also love reading Mark Douglas, and I remember really clearly in that book where he basically talked about if you're 100% confident that that a trade's gonna go in your favor, there's no chance in your mind that it could go wrong. So you don't need a stop loss, and whoever enters a
Yes.
trade without a stop loss. But then you do enter a trade with a stop loss, and then price reaches the stop, and then you convince yourself through other charts or whatever else you may
Yep.
use that, oh, actually this wasn't my stop, and then you bend your rules. And that's I mean, trust me, I've done it. But when you actually think about the psychology behind it, you're convincing yourself that that trade has to go in your favor. And even after retracing through your stop out area, you still think it's going to go in your favor. That means that you didn't fully accept the fact that this trade could be a loser. And maybe you
Yeah.
just need to increase your stop, or maybe you just need to maybe you just need to change your beliefs about whether you're right in the market.
And I actually struggled with this for a very long time, and I just want everybody to know what I did to fix it. So I used to really struggle with this. I based a lot of value upon myself with every trade being correct, right? And one thing I did to change this, and the reason why I changed it is because even though I was 90% of the time having winning trades, I was still failing, right? And it's very important for you to identify this problem. And the first step of understanding that this isn't correct is by just looking at your P&L, looking at your past month, right? How much money did you make? How much did you lose, right? And once you've identified the fact you are not profitable, or even if you are profitable and you just want to make more money, right, you have to understand that your mind is not correct. The way that I went forward with this was literally writing down so if I was not a disciplined trader, I would write down I am disciplined trader because I wait for price to reach my zone, right? And write down exactly what it is you want to change about yourself, right? Become the person you need to become a successful trader, right? These things don't just happen, right? Everyone thinks like, oh, when I trade for 2 years, 3 years, I'm finally going to be profitable. Listen, nothing is going to make you profitable other than accountability and discipline,
Yep.
right? And it really comes down to actually changing what it is that's bothering you, right? Why don't you feel like you deserve this, right? Write these things down, really dive into it, figure out why you believe this way, and then you can change it, right?
Yep.
And literally, that's what I did. I wrote down what my weaknesses were, right? I really logged my losing trades. We always talk about logging, how important that is, right? We dive very deep into logging our trades. It is the most crucial part of becoming consistent. Right? And it's hard to do, right? And we just started a new thing on the Discord, right? With losing trades only, right? So we literally will only put losing trades in here, and I don't care what happened, how much money was lost. I don't care if you lost $10 or 10 grand. We want to talk about it. We want to flesh it out because that is the only way you are going to be.
Yeah, I'm sure so many people know exactly what we're talking about, where you make profits and you just give that money back at the end of the week. It's happened to me. I know it's happened to you, Josh. But the way that you can get past that is journaling your trades and deeply analyzing what it was psychologically that prevented you from just stopping out and needing the market to go in your favor. And I mean, that's just why I love this game, because especially through journaling, it's allowed me to really dive deep into my psychology, face some fears about myself, some things that I didn't want to admit about myself, how much I felt like I deserved. And it's a constant process, That's what I love about it.
Absolutely.
Yep. So the last thing I want to talk about for maybe new traders is we got all these. We kind of touched on it before, but we've got all these zones. We got all these indicators for entry, and a lot of times we just need to act on our edge. We need to act on our edge instantaneously, even though we don't have every single factor telling us it's going to work out. Because as we just talked through, you're never going to have every single indicator working in your favor.
No.
That's why we have stop losses. So, what can new
Yeah.
traders do to accept the fact that their trade, like they need to internalize the fact that their trade's not going to go in their favor 100% of the time, and they just need to pull the trigger and set a stop loss. I mean, that's basically it, but I know we kind of mentioned it before, but I think it's super crucial.
It is, because I struggled with this for a very long time, right? So one thing I used to struggle with as an options trader, I'm sure everybody can relate, until you have a lot of capital, you're really limited to how many trades you can take per day. So you start out, we'll just say $1,000 in your account, and you want to make one trade a day. That trade needs to be right. So you will tend to obsess over analysis versus a probabilistic mentality, right? And we break this down. It's very important to understand. A probabilistic mentality means that your success is tied to a series of trades, right? So if you are so concerned, right, with making a perfect trade every day, waiting for that perfect indicator, right, you are going to make the wrong trade, right? And what that stems from is fear, right? So the first thing that I can recommend is lowering your size, right? If you have $1,000 in your account, lower your size to one contract. That way you can now make 10 trades a day based on your strike price, but we'll call it 5, right? That way you can make 5 trades a day and really flesh out what your process is, right? Because if you have that factor of you need a perfect entry, right? You don't need a perfect trade to be profitable. All you have to do is identify buyers, right? And how we do that is through these zones and volume. So I challenge everybody listening, right? Because it really changed my life. Is when you see your edge, right? When you've identified price coming into, we'll just say demand, right? Or any area of value, and you start to get a rejection, right? You get that Bayesian candle, you get that volume, you get that chart pattern, right? This is when you enter without any hesitation. I don't want you to set up a perfect trade. I don't want you to go, hold on, I got to wait for another factor. I don't. I want you to adapt market conditions. I want you to identify your supply and demand zones, your area of value. And I want you to identify chart pattern and volume. That is it. Anything else is noise. Anything else is contradictory to a probabilistic mentality, right? Because if you can trade this way, you will be successful, right? When you're looking into so many reasons of getting in, or in same goes with exits, right? I want you to have a repeatable edge that you can do daily, right? And that you can start working on trading on a series of trades basis. I hope that made sense.
That's amazing. I love hearing that, because that is really all you have to do. I know it sounds super simple, but if you do not have the amount of money in your account to act on your edge when it shows up in the market, if you only have enough cash to act on one trade a day and then your buying power is out by the end of the day, I don't see how that's going to work. I mean, you're putting too much pressure on yourself for that one trade to be a winner. And I mean, your edge, it might show up twice in a day, it might show up 6 times in a day, and it might never show up in a day. But if you don't have money in your account to act on your edge, you're not going to be able to build your edge. And I think it's so crucial about what you said about acting on your edge. I know Mark Douglas talks about it. You got to act on your edge without hesitation. And if it is your setup, you need to take it. Your mind is going to try to tell you all of the reasons why you shouldn't get into the trade, but your mind is just magnifying that 30% of the time where your trade's not going to go in your favor. And you need to tell yourself that you have the probabilities stacked in your favor if you follow your rules, and you need to act on that. And I think it's much easier said than done, but that is the strategy. And it takes time. Obviously, it's not something that you're just going to be able to do after a couple months and have it down pat. You know, it takes a long time to build this strategy.
Yeah, and it's just so important, right? To kind of pull. The only way to control that fear is just reducing size,
Yep.
right? And and simplifying the term, right? You get a chart pattern. I don't care if you just want to trade pre-market high and pre-market low, right? I had a member on the Discord say, "Hey, is it okay for just me to trade pre-market high and pre-market low?" I'm struggling with identifying supply and demand on larger time frames. I said, absolutely, that's right. I was like, that is
Absolutely.
completely fine. Build confidence, build control, build your conviction within yourself. These are the things that will lead to profitability, right? This is a process. Yeah, it does take time. There are many traders that have become profitable by understanding this concept, right? That perfect trade a day, it's got to go away. You got to get rid of it. Literally, it all comes down to fear of being wrong. You need to understand you are not wrong until you focus on trading perfectly every day. If you just can identify your edge and go for it, you will be consistent. I promise you that. Right? If you can control that, you will be consistent.
Yep. Couldn't agree more. Oh, that's awesome stuff, Josh. Do you have
Yeah.
anything else that you wanted to go over, maybe regarding this last
Yeah.
week or?
And so all what I want to do for everybody on this that's listening to this, like I just want everybody to run through a trading process, right? I know we offer one on the Discord, right? We offer one on the course, right? But I want every trader out there to identify a process that they can run through every single day, right? A step-by-step process, right? Ours is observing market conditions, right? Number one. Number two is identify your areas of value, right? Number three is identify your chart pattern within these areas of value with volume, right? Number four is predefine your stop loss and also predefine your target, right? Understand if I get in here, right, where am I going to get out of this trade? Where's my target? And where does price need to go to my trade? Last and most crucial part of this process is logging your trades. Listen, you cannot make progress in something that you do not measure. It is so important to measure yourself, right? If you go to the gym every single day, but you don't measure how many reps you do, you're never going to do more the next day, right? We need to use numbers in our favor. This is a game of law. This is the law of averages, right? We need to work on that, right? So all I could recommend is that everybody runs through a systematic process that they can continuously work on every single day, right? You do not have to be perfect, right? You do not need a perfect trade to make money. Literally, all what you have to do is get in a trade to make money. All what you have to do is work on yourself, right? Become more disciplined, right? Change your lifestyle, right? Like Darren mentioned it earlier. Tidy up your house, right? Start to make your bed in the morning, right? I know this sounds stupid, but these little behaviors will show up in your bank account. I'll never forget. There was a time I was 300 pounds as a kid, right? I was super sloppy, didn't take care of myself. I was consistently failing. Then I started to change my behaviors. I started to change my beliefs, right? I started to change what actually adds value to myself in my life. How can I become a better man? And all that started to show up in my bank account. All that showed it up in how I made moves on the market, right? And dive into behavioral science, right? Another very important topic, right? Look into the psychology of human behavior, right? This will help you so much in and out of the market. And definitely read both books by Mark Douglas and get involved in a community of like-minded traders. I don't even care if you don't join our Discord, right? Join a team that is going to hold you accountable, right? That's not just going to call out trades, right? I don't care how many Lambos the guy has on Instagram. Listen, find a community that will teach you how to fish, not just give you fish. You know what I mean? Because these are the skills that are going to really bring you wealth, right? And definitely check out our Discord, check out our YouTube channel. Our main goal over here is to provide most quality and high value content for traders and to just build this army, right? Darren, thank you so much for having me. This has been great. Absolutely love it. We are going to continuously do this, right? And everybody have a great week on the market.
Thank you, Josh. Great having you on, and have a great week trading, and have a good weekend.
Yes, you too. I'll see you later.
All right, take it easy.